On Thanksgiving Day, I put out a video basically where I said I was going to be taking some profits out of my stocks. And why that is Trent has convinced me that we need to enter some risk management into the cheat sheet because, as I explained in the other video, we go through cycles. We've experienced this with the dot-com bubble, we experienced it with the real estate crisis, and then we've experienced it more recently with all the fervor over EVs, and then the whole thing came down. Trent explains this. This has to do with cycles and movement of money.
It's economic cycles. They go in and out. There's 4 of them, and it's like the seasons of the year. You know, you got spring, summer, winter, or fall and winter.
Right.
And winter is an example of a downturn.
Okay.
Yeah.
So with that in mind, I am of the belief and strongly believe that AI is going to be the major mover of our economy as we move forward. But I also recognize that there has been a tremendous amount of money spent to make this happen. And I'll use Google, Amazon, and Microsoft and Meta as an example. They've spent, it's estimated, somewhere approaching $2 trillion to have the chips and the data centers to deliver you AI, but they have yet. It's all been a free trial up until this point. ChatGPT is basically free for most people, $20 for some. BART, similar. I'm using a Notebook. It's phenomenal, but it's free. So until those free trials are over, the providers are not going to have the income that they've had in the past, or they aren't going to have the growth in their income revenues that they have in the past. And so there's going to be a pullback. Agreed?
Agreed. And I think it's just, you know, I went through the dot-com. That's when I first got into the financial advisory business. I was working for a basin modeling software company out in Boulder, Colorado in the late 90s. And anything went up. Any dot-com company. Right. I remember Exodus. They were laying fiber optic across the whole entire world. Where are they today? They're out of business. You know, you look at WebMD, all of these companies, there's a lot of hype, a lot of high energy behind them. And, you know, I remember Joe Kernan saying it's a new world. You don't have to make money. It's just you have a great idea. It'll get funded and it'll go through the roof. And then that ends.
And so with that in mind, I have said I recognize that I'm in the right companies. It might not be the right time. So I want to protect my portfolio. And that is to say, take some profits, put them on the side, maybe find some depressed stocks that are in a growth cycle and move some of that money there, but also hold some on the backside so that if and when NVIDIA finds a new surge up, because again, you got to recognize that somebody's going to come up with competition for NVIDIA's chips, and that's probably going to be Google and Amazon and Microsoft. So this picture's going to change. I just want to protect my profits to make sure that I come out on the winning side. So how are we going to present this?
Well, I think there's 2 things we have to look at. One is the economic side of it.
Okay.
The fundamentals of a company. Are they making money? Are they profitable? Are their revenues increasing or decreasing? Are their earnings per share decreasing or increasing? Do they have free cash flow? Are they borrowing money to actually stay alive? That is an important thing, especially with interest rates so high at this point. So then there's this other side, and that's the stock market. And that's what you look at from a technical standpoint. Is the stock trending higher? Is it above the 200? Is it above the 50? Above the 20 price-wise? Or is it below one or all of them? And at the end of the day, the market will price in what a company is worth. It will hype it up, and then it'll turn around and slam it without you even knowing it. And that's where companies, for instance, AMD is a prime example. This is a company who is a competitor of NVIDIA. Its present trading price is below its 20, its 50, and its 200-day moving average right now. Yet it has a quarterly year-over-year positive cash flow of 67%. They're making money in comparison to 12 months ago based on the quarter comparison. So that's an indication of, well, that's strong, that's good, but why is their stock selling off? Well, does the street know something? Is that sector starting to wane? Or did some news came out recently that they laid off 1,000 people?
Yes, they did.
Why would you lay off 1,000 people if you're growing at this massive rate? Because the growth rate is slowing. And so when you look at stuff like that, you need to go more in depth and looking at things from a quarter to quarters basis.
And I think that using AMD as an example, if you'll do some research on AMD, they are not keeping up with NVIDIA like it was anticipated that they would. And they are not replacing NVIDIA chips like it was anticipated they would. So we have to look at the stocks from both a financial perspective as well as what did you use the word, not quantitative, but qualitative?
Qualitative, which is you're looking at news reports, new
Right.
events that human beings create, kind of thing. You think about it. Whereas qualitative, it's all numbers.
Okay.
I'll give you an example. Hype on NVIDIA. What's the qualitative take on it?
That they have the chip that everybody wants, and everybody wants them as quickly as they can get them, and that they're way ahead of the game of everybody else.
Okay. From a quantitative standpoint, if I'm just looking at revenue year over year on a quarterly basis, in first of the year, so first quarter of this year, fourth quarter of last year, their earnings were up quarter over quarter of 265%. That's spectacular, right? Okay. For first quarter of 2024, their earnings were up quarterly year over year, up 262%. Just a little drop there, okay? But we get into second quarter of 2024, and they're only growing quarterly year over year 122%. Still a spectacular number.
But their pace of growth has slowed down.
And then this quarter, they only grew 94%. It's the same picture when you look at it from an earnings per share basis. What does this tell us? What it tells us is they're not selling as many as they were a year ago.
No, I think what it tells us is the rate of growth is not as fast. They could be selling as many, but the rate of growth, if they sold 100 and then the next year they sold 150, that's a 50% rate of growth. If then the next year they sell 175, that's not a 50% growth rate of growth. So they're growing and they're selling more, but the rate of increase is slowing down. And I would interpret that to say that then their growth, the rate of growth of their stock will slow down as well.
And if you look at NVIDIA today, over the last, say, 2-3 weeks, what has NVIDIA done? It's pulling back. If let's flip this on the other side.
Let's just focus on that. So what do? If we need to, do we bail on NVIDIA? No, I don't think we do. But what I do is take my profits out, set them on the side. If there's no better place to invest them, I leave them on the side and wait for NVIDIA's growth rate to pick up. Maybe they come up with a new product. Maybe they come up with build their ecosystem to include the software, which I'm aware they are trying to do. So maybe their product gets better and their rate of growth grows faster than it is currently.
The other element of this is you have to take into account where are we at on a bigger picture of the economy. Where are we at when it comes to economic conditions? Are we in a growth phase? So that would be, in my opinion, sector 2, where money is cheap. The Fed is easing rates. And there is aggressive build out of something. So that was 21, 22, and part of 23. You saw AI take off. Now we're in this phase where we're starting to see that slow. We see money is more expensive. Interest rates are through the roof. The Fed is more on a dovish side of things. They're hesitant. There's a inflation factor that's becoming a headwind. So when I look at that big sector element, I go, okay, if we've moved from a sector 2 of aggressive growth, which includes technology, to more of a stagflation environment where you have slowing growth and rising inflation, participating in companies that do well in that sector is key. Doesn't mean you sell your 100% of your NVIDIA. You keep your exposure because the sectors can change very rapidly. So when you're looking at your portfolio, you have to ask, am I so concentrated into one sector that if that sector or that starts to decline and falls off, am I getting wiped out? And at the end of the day, technology, AI in this case, will continue to be strong. It has been a part of our lives since the early 90s now.
Right.
And it's accelerating. The rotation of economic sectors is also rotating. With a new presidential administration
That is what I wanted to bring up also.
it is very bullish. Why is that bullish?
We think our new president is more favorably oriented towards business.
Towards business. And so what's restricted?
But we don't know that yet.
No, it's a lot of hearsay and it's a
Right.
lot of here's what I'm going to do.
Right.
But you don't know until about 3 months after they're in office.
Exactly.
Right?
And that becomes a fear factor. Or an uncertainty factor.
Mm-hmm.
And that, again, could pull that down. And I want to be in a position. And then you made a point of what is Warren Buffett doing? And then I just read an article that the C-suite of NVIDIA is doing no buying and a lot of selling.
They've been selling stock for a year now.
So we need to integrate that into our cheat sheet and present it to you in a manner that you can understand it. And that's what we're striving to do over the next 30 days, 60 days, so that you can have a place that you can understand what we're doing, why we're doing it, and then you can also get notifications.
Right.
And I don't want to set myself up as the know-all, but I want you to understand what I'm doing and why I'm doing it, and that's why we put out alerts.
Yeah.
When I buy something or sell something, you will receive an alert, and hopefully then you can come to the website and you can understand it.
Yeah, and the key to all of this is understanding how to read the cheat sheet. The cheat sheet is pretty magnificent. It really summarizes key points that are required to making really good fundamental and technical decisions. And when you start to create a process to layer that on top of each other, you'll make better investment decisions. What drives me crazy is when people get so hooked to an idea and they ride it all the way to zero. Enron was a prime example. WorldCom, a prime example of this is a great idea. Oh, it's, yada, 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 whatever. And now those people are bankrupt in those stocks. And that's what risk management is, the true key to any game. Football, baseball, investing. You look at poker players are the best risk management managers in the world. If you can take that and take our cheat sheet, sign up for the gold service, which is $19.95 a month.
And a 14-day free trial.
But also take that and learn to build the fundamental foundation of how to invest. And don't fall in love. You can fall in love, but you got to also know when you're getting dumped. So there's, right now, for instance, we've talked about your portfolio and helping you, guide you. Micron, for instance. This is short-term memory stock company out of Idaho here in the United States. It's presently trading below its 20, below its 50, and below its 200-day moving average. From a technical quant model trading, that's a no-go. That's I'm out of here, the market's out. And so what you have to take into account is the market and the fundamentals are two different worlds, okay? And what you have to take into account is if the market says it's really worth only $94.96 versus its 20-day moving average of $102.77, you have to factor that into your risk management. And that's where What we're going to be bringing you in the future is more understanding of combining the cheat sheet, technicals, and ultimately Kerry's position in his portfolio and how he's going to risk manage around that.
Okay, that gives you our theory behind what we're going to do. Now I want to talk a little bit about how we're going to change the cheat sheet around to make it a better education vehicle for you. The cheat sheet will stay in its format. You'll see some expansion upon it, but we also want to make it an easy education. And so where I have in the past had links that you could go to what is a PE ratio and what is a PEG ratio, we're going to organize that in a panel or what would you call it?
It'll be a part of the website. So when you go on and log into your account, you'll be able to go to the cheat sheet and you'll be able to download a PDF version, which will be updated every Sunday. So you have the updated version of it. Because the cheat sheet is based on a quarterly system, data doesn't change all that much other than the simple moving averages and the stock price. So you'll be able to go on there, be able to download it or view it on the website, along with all these definitions of these different technical or fundamental indicators.
But they will be in a different panel or a different bracket so that you can go to each of them and you'll get a dialogue by Samantha and Brad, who will explain to you what a PEG ratio is, what a PE ratio is, how does the earnings, operation, gross margins differentiate from operating and gross margins, how are they different? And so you'll be able to educate yourself, and it'll be a place you can come and find the answers to what is and you'll find the answer. Then we'll have a separate section which will deal with each of the stocks. And as new news comes out on each stock, again, you'll be able to click on a link there and you'll get a narrative. So in essence, as an example, I did what is the cook in the book story relative to Supermicro computer? Well, that's an old story. Or maybe it isn't. But you'll be able to go and get the latest updated information that we find on stocks on a daily basis. That's not yet automated. Eventually, our AI agent, Samantha, will do that. But the cheat sheet is totally automated. It will be an AI document as we move forward, and it will just get better in the future.
Yeah, and that's the whole thing about this is it expands as we find different ways to analyze data and share that with you. It will create a more seamless ability to invest on a smarter scale or on a larger scale and be able to manage your portfolio and live your life. I mean, that's really the trick.
Yeah. and as we get this more and more automated, the scope of the stocks will expand beyond the 42, and someday we hope that it will be in such a fashion that you'll be able to put in a ticker symbol and all those lines will fill. But that's in the future. But I want you to know that's where we want to take this. We want to teach you to become a better investor. And that's our objective. And to make it, and again, I think the other thing you need to recognize, we're spending a lot of money on this, but we're not asking you to. We're creating a community that is pooling their $19.99 a month to gain access to all this data and all the information so that you and I can make better investment decisions.
Cool. So check us out at bestofusinvestors.com. Go to the service tab and check out the different services. Where you get the platinum or the cheat sheet is both on the gold and on the platinum level. Platinum is everything that we offer, including swing trading watch list, along with our daily price range projections and the cheat sheet, our Friday swing trading call, along with the Kerry's call. And then the gold, $19.95, you get the gold, you get everything except for the swing trading watch list. It's for this honestly is the best deal.
Yeah, and I want to add to that the Discord. That's the community. That's where you make friends. It's your coffee shop. It's where you've got 1,000 people that you can talk to, meet up with, exchange ideas, explore ideas, and then you bring those ideas into my office, Trent's office, Mark's office, ask questions, and we respond to you. We want this to be a community and help you become a better investor.
So go to bestofusinvestors.com, services, check our services out. We look forward to seeing you on the next 3 o'clock Kerry's call on Fridays. See ya.